Yo, what's up, guys? How you all doing? Thanks for tuning into Fox Podcast. This is Demola, aka Damian Rules FX, and yeah, I'll be teaching you guys the four basic strategy you need to know in the forex market. These are the four vital basic strategy you need to know in the forex market. And then once you know this four basic strategy, it's going to be a help for you in the long run in the forex market. So without further ado, let's go on chart right away. Follow me. All right, guys. So we're on chat right now. So, like I said, I'm teaching you the four basic strategy you guys need to know, and it's number one is the supply and demand, which is the bread and butter strategy that almost every trader knows, right? Supply and demand, the breakout trader strategy, the trend line strategy, and the smart money strategy. Those are the four basic strategy that you need to know, and I'll be teaching you guys within 10 minutes. We'll be done. So, and this strategy, you guys need to know them. You guys need to know them. It's very, very important. You guys need to know this strategy. And by the end of this video, I'll be telling you why you need to know them, right? So, so let's just start right away. So, the first thing is supply and demand strategy, right? So, the supply and demand strategy is just simple like this, right? So, once the market is, say, in a supply market, the market moves downtrend in the supply market, right? Then the market goes up, forms high, lower lows, lower highs, and lower lows, right? Lower highs, lower highs, and lower lows, right? So once the market breaks the previous low, the high there is regarded as the supply zone. Like for example, what I'm saying is this low, once the market breaks this low, this is regarded as a supply zone. The moment this market breaks this other low, this is regarded as a supply zone. And the moment the market breaks this low, this is also regarded as another supply zone. So this is what we call the supply chain in the market. So supply chain, this is what we call supply chain, and supply chain is available for sales only. So this is where the traders, supply and demand traders, those who trade supply and demand trade strategies, they put their sales here and their TP just below this low. All right. So once they wait for the market to retrace back into the supply zone, and they put another entry there again. They stop just above this high and TP just below this low. And that's how they do it. That's how they do it. And this other one too. Once the market gets to this supply zone here, stop stop loss right above this high, TP just below this low. I'll be showing you on chart, right? So not I'll be showing you on chart soon. So you guys just chill with me. And this is just the basic thing you just need to know, right? This is just the basic thing you just need to know on the supply chain. And in the demand chain, in the demand market, market forms higher highs, higher lows, higher highs, higher lows, and higher high, right? So once the market breaks the previous high, this is the previous high. Once the market breaks this previous high, this is regarded as a demand zone. And this is where demand traders, supply and demand traders, love to go on a long here. So they love to go on a long here, put their stop just below this. Right, that's the POI, put the stop below this, and their TP just above this high. Right, TP just above there. And once the market retrace back into this levels here, this another demand zone. So they see this as a demand zone because why is it a demand zone? Because it breaks this high. That's the reason why it's called a demand zone, right? Because it breaks this high. So once the market breaks that high, then you wait for the market to retrace into the demand zone, then they look for buys again, right? And that's how they do it. And right, the market won't be as smooth as this, right? It's not going to be as smooth as this, so you guys need to be careful. But you need to understand this strategy first before we move into the advanced stuff. But these are the basic ones you need to know what are in demand and supply strategies, right? So this is a demand zone here, and we have another demand zone here because we break this high. And one thing you need to understand, right? If the market didn't break this high, once the market is around this zone, this is not regarded as the demand zone yet because it doesn't break this previous high. So you need to understand that this place is not a demand zone until it breaks this previous high. Then we can regard this as a demand zone because the market can just come here and still push down into this demand zone because this is the previous demand zone because it broke this high. So you can still come down here, then still shoot up, right? So those who are trading this get stop out. So that you need to understand proper demand zone. This is not the demand zone. This is the real demand zone, and so that's it. That's what you need to know in supply and demand levels, right? And we'll move on to the next one, which is so the stop over here, and that's it, right? So move on to the next one, which is breakout strategy. I'm teaching you guys breakout strategy now. I'm doing this thing. All right. So breakout strategy is simple. Breakout strategy in the bullish market, once the market forms a high and goes down, forms another higher high. All right. The breakout traders, what they do is they put sell stops here. They put sell stops here. So the trigger is once the market breaks zone, the trigger is sell. They put the stop there because they feel the market will be going like the market is bearish because we broke structure. We broke structure, which is this levels here. We broke this low here. So they feel the market is going to go down, down, down. So that's what they feel. They always put sell stop order here and their stop will be here. That's how they do it. So that's just basically the strategy they use. I'll be showing you on chat soon. You guys just stick with me. And for a bearish market, all right, in a bearish market, once the market forms a low and a lower low again, all right, once the market breaks this low and it comes down, break this low again, right? What would they do? They break out strategy, guys. They put their buy stop order here, right? They put buy stop order here because they feel once the market breaks this zone, the market should shoot up and up and up and up. So they always want to be the first to enter the market. They put their stop right here. This is where they put their stop loss and they trigger a buy. That buy stop order is being triggered here. So the buy stop order simply means that the market is going to buy. So that's basically how they do it. And you guys need to understand this thing. It's vital you guys need to understand this thing. I'm not saying you guys should trade it, but you need to understand this thing. There's a reason behind it. So then the third strategy you guys simply need to know is trend lines traders. So trend line traders, this is what they do in a bullish market. Once the market forms a high and it went down and form another higher high, right? In the trend line traders, this is what they just do. They just connect these lows, first low, second low, together, one touch, two touch of the trend line, and they connect this. They connect the trend line. They extend the trend line into the future. So and they wait for a retracement into the touch of the trend line. The third touch, then they trigger their buy. That's how those guys trade. The trend line trader trade. They wait for one touch, two touch, and on the third touch, they trigger their buy. They stop just below this, and then they buy. And their TP just above this high. So that's just basically it. So their TP just above this high, and that's it. That's how they trade. And in a bearish scenario, this is a bullish scenario, and in a bearish scenario, once the market is downtrend, the market is moving downtrend, right, like this, from a lower high, a lower low, right? The trend line traders simply put their trend line one touch here, two touch here, and they extend it to the future. That's how the trend line traders trade. They always want to wait for the market to break these lows, all right, then break this next previous lows here, and they now put their trend line there, one touch, two touch. That's how they do it. Before a buy scenario, they always wait for the market to break this first high, all right, and break this other high. So once the market breaks this high and breaks this other high, they, they align their trend line, right? Then the top touch of the trend line, they buy. So same thing in this scenario here. So this high and this high, they connect it together. Then on the third touch of the trend line, that's it. That's what they sell, right? And that's it. That's what you need to know on the trend line strategies. So they put their stop loss just above this high, slightly above the high, and uh, their TP just below this low, and that's it. And that's it. So you guys need to know this vital, simple, basic strategy. This is very, very simple bread and butter strategy. I'll be showing you on chat now. So going on chat soon. And lastly, I said smart money, basic smart money strategy. you use. So the basic smart money strategy is just simple like this, right? So um, once you see the market goes up like this, right, comes down like in a bearish scenario, and you see the market takes out this previous high here, this previous high, the market takes out this previous high, then break structure. The market takes out this previous high, right, and finally broke structure, right, and you wait for the market to retrace into these zones. So it's more or less like a supply demand zone, but this is what they want to see in smart money. Smart money, they want to see the market break the previous high and break another low, the previous low. So then they wait for the market to retrace back into order block, order block area. So order block simply means like the last up candle before the down candle. You guys should know order block, right? You guys should just go on Smart Money. ICT is the founder of Smart Money. Shout out to ICT. So you guys can chat him on YouTube. He'll teach you more about order block. But this is the basic Smart Money strategy, right? So you want the market to retrace back into the order block, then market shoot down, right? This is the pattern, this is the strategy you need to understand. It's more or less like an head and shoulder, but it's not really an head and shoulder because we have an order block and like market need to retrace back to, then the sell from there. So this basic thing you want to do. I'm not saying you guys should trade these strategies, but once you understand these strategies, then yeah, it's all about creation of liquidity. You need to understand why this thing is these things are created, this strategy are popularized because these are the four basic most popular strategy in the world today. And I'll be telling you the reason why all these things are very popular in the market. So this is the sell strategy of the smart money, right? And on the buy side, right, you want to see the market go down trend first, forming a lower high. The market breaks this low, then it breaks this previous high. So once the market breaks this low, break this low, and break this previous high, yeah, and that's smart money strategy. And they wait for the market to retrace to the order block. So order block, like I said, is the down candle before the break of the structure. The last down candle before the break of the structure. That's your order block. Then the market retraces back to the order block, the last down candle, and the trigger buy. Smart money guys trade. That's how they trade it. So these they're going on a short here. CP just below this. This they're going along here. CP just above this. That's it. That's it. And I'll be showing you on chart right now, right? How this thing works. And you guys, right? Like I said, in supply and demand. So you want to see the market go up and go down, go up, go down. So let's see this just the market went here, went down, break this low. So this is what we call supply chain, supply zone here. Once the market retraces back here, look at it. People are selling you at the supply zone. Simple as that. Simple basic strategy you ever need. And the market went down, breaks this low. All right. Once the market breaks this low, we also have another supply zone here. So once the market comes into the supply zone, these areas, that's your supply zone. That's another shot there. You can take another shot there. Same thing again. Market retraces up. Once the market breaks this low, we have another supply zone again. It's just what it is, right? So where the supply zone, this levels here. Same thing again. The market retraces up. Right, it went lower, then it came retraced, then it broke this last low. This is the low. So the moment it broke this low, let's wait for another supply zone. All right, this is the supply zone here. The market come back here, then came back here rather, then melted. So this is one called supply chain, and you can also see there's it's also a trend line. It's also a trend line strategy. Trend line traders also see the same thing. Like I said, once the market breaks this low, like the market, right, like an equal lows there. But once the market breaks these lows, sorry about that, and forms another lower low, what did I say? You connect these two dots here together, the two previous highs. So you just want these two previous highs, and that's it. This one touch to touch, that's it. Once you connect these two previous highs together, so you wait, the wait until the third touch. So this is the first high, the second high. So the wait to the third touch of this trend line, then this is where they sell from. So once the market touch this trend line, that's the sell. The stop is there. That's how they do it, and pretty simple. So that's how they do it, and the sell here, that CP just below this. Pretty simple as that. That's just how they do it. But I'm not saying you guys should trade it, but you guys you need to understand this thing. You need to understand how they do it. And this the sell side, and on the buy side scenario, you can see this. You can see this, right? Like the supply and demand here. You know, all these are demand zones here. All right, market came back, touch, came back, another double touch, triple touch. A lot of people are buying this thing right here, right? Then if you look at it closely, you see like the trend line here. So this is how the trend line traders traded. So let's see the market. That's said, the market should break this high. So once the market breaks this high, then this one touch, two touch, they connect these two lows together, right? And they project it into the future. So at the third touch of this, which is right here, they're buying this thing. The stop is here. This is basically how they trade, right? This is basically how to trade the trend line. And they still project this trend line into the future. Their TP just right above this high here, right above this high. So this trend line they still project into the future, hoping like the next time like market should touch it again, and the market did touch it here, right here, right? It touched the trend line right here. So the minute you touch the trend line right here, they're buying this thing again, and their TP just right above this high there. And that's how they do it. All right, that's how they do it. And yep, so that's basically how they do it. Trend line, trend line, trend line. And the breakout traders, like I said, they always put buy stop order here. So once the market breaks here, their buy stop is triggered, and their stop loss is here. Same thing to downtrend. Look at this. This high connected to this high, and that's how they project into the future. All these highs, plus these highs. So once you make those highs together, then that's it. And they project into the future. And look at how market is respecting those lines. Anytime market came back into those lines, it melts. It's continuing to sell here. Once the market touch it, it sells here. The market touch here, it sells. They go on to sell here again. The market touches the trend line here. They go on to sell here. Sorry. So I'm just showing you how to do it, right? How to do it. And this is just recent price action. But you guys don't. You guys, this is not how to trade the market. And there's a reason why I said it. That's not how to trade the market. You're not supposed to trade trend line. You're not supposed to trade smart money. You're not supposed to trade supply and demand. You're not supposed to trade all these things. So the reason why, like I said, you're not supposed to trade it, but you need to understand um, their concept is because it's liquidity. All these are liquidity in the market. So you need to understand that this is liquidity. Why does this liquidity? Is because 90% of traders lose money, right? Why do 90% of traders lose money? It's because they always trade the most popularized strategy in the world, which is plan demand strategy, breakout strategy, trend line strategy, smart money strategy. Those are the most popular strategy in the world, and most traders trade it because it's very, very simple to understand. But that doesn't mean it doesn't work. It works, like I showed you right here, right? It works, but it's not all the time that it works, right? This thing doesn't work all the time. Like if you look at this is a huge trend line right here. Okay, so like I said, this is a huge trend line right here, right? This is a huge trend line right here. But look at it. The market won't respect the trend line forever. The market will never respect the trend line forever. What happened there? The trend line failed. Like although it worked here, the trend line worked here. They were happy. It worked in this touch. They're happy. It worked there. They make some money, right? But look at it. It failed. It failed in these levels here. It failed. Why did it fail in these levels here? Why? Do you know the reason why? See, there's a reason behind this thing. Like this right now, this is a lovely trend line, right? But the trend line won't respect this trend line forever. The trend line failed in this level here, right? Why did the trend line fail there? There's a reason behind it, and that's what we'll be teaching you as time goes on, as time goes by, we'll be teaching you the reason why you shouldn't be taking some trades like this, or shouldn't be taking this type of strategy, trading this type of strategy. You shouldn't be trading it because this is how we call liquidity in the market. So once I see all this, I see this as liquidity. So I'm looking to short, I'm looking to sell, to take out all this liquidity. All right, that's how I see it. I don't see it like a solid strategy that works, but it works, but it's not every time it works. Right? You guys need to understand it's not every time this thing plays out. And for the smart money guys, there are those who trade smart money and all that, right? If you look at this closely, um, this is a nice smart money strategy here, right? We saw this top one right here, we saw this break of structure here, and you saw this last up candle. So what happened here? We were going on a short here, right? But what happened? The market's moving up. Why? There's a reason. Liquidity. So you guys are adding up to the liquidity, and that's the thing. So you don't trade this concept, but you guys need to understand this concept. And yeah, but in the long run, we'll be teaching you how to trade um all this concept. But first thing first, you need to understand this thing because once I see stop point break of structure here, I see this as liquidity in the market. So a lot of people are selling here. So what do you think the market will do? The market will definitely shoot up and take out this money. People stop losses here, right? So the liquidity simply means stop losses of traders. So where I see trend line, I'll be looking forward to taking out those trend lines. So I'll be trading the opposite directions of where those trend line guys are trading. Same thing with smart money, same thing with other strategies, right? So you guys need to understand that this thing, they are tradable, but they're not reliable. But you guys need to understand the concept first because you need to understand what liquidity is. And as of yesterday, we took a nice trade on CPI, me and my team, and Mena will be sharing you those trades we took yesterday on CPI. So you guys should just stick around. Mena will be explaining more on the psychology behind the trade and why we don't trade supply and demand and trend line strategy and all that. But we understand that those strategy are liquidity for us, we the non traders, right? So stick around and watch the next video that will be dropping soon. Then I'll be sharing how he made 1 to 15 hours. That's 15% of his return over 49 pips, I guess. So, but we reached what was 15 hour. We took 15 hour on that trade. 15 hours simply means 15% of the amount we are risking, and it was a nice trade. And we'll be breaking it down for you, our entries, and just stay tuned, right? I hope you guys learn from this video. Ensure you guys subscribe, like, and share this video, and stick around for the next video where I will be sharing with you guys how we took a trade on CPI yesterday, and we'll be breaking down our entries, and we'll be showing you guys, and we out.